Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. This man, Mitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor or call your broker. That's what they're there for. And there's the disclaimer.
Excellent.
Yep. And I am going to share my screen. And as I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, type it into the live chat on YouTube. Will's watching it and he'll read them back to me. And we'll take a couple minutes and look at the pre-market report while you guys are typing in those questions. See if we could get some insights, what's going on in pre-market trading, and then we're going to move on to the questions. Okay, so pre-market report. Up top, you see a calendar view, and this does allow you to go back in time if you wish to see what happened in a pre-market on a particular historical date. We show the last weeks of top line data. If you spied any kind of something unusual or trend. Today, we're on February 22nd on this date. And as we see here, we have 749 stocks trading higher in the pre-market, 265 stocks trading lower. As far as volume goes, we got 197 million shares trading on up volume, 71.5 million shares trading on down volume. And if we convert that volume to dollar value, we have $9.1 billion worth of stock trading higher versus $523 million worth of stock trading lower. So from that perspective, so far, looks like traders in the pre-market are trading with a pretty decent bullish lean. And of course, I think the big one yesterday was NVDA earnings, and maybe we'll take a look at that if we don't have any questions, what's going on with NVIDIA. But I think that's also helping lift the market. Let's look at this from a couple more perspectives, then we'll move on to the questions. I'm going to slide down, and now we get a little bit more granular view. We see stock symbols, trading in the pre-market hours with price changes, prices, volume, alerts. We have a list of our most active stocks in the pre-market, our biggest percentage gainers and biggest percentage decliners. 228 stocks made it on our largest percentage gainers list and 44 on our biggest decliners. So that also points to a more bullish sentiment in a pre-market. Now, to make this list, we do set thresholds for liquidity, volume, price change, because things in a pre-market tend to trade with less liquidity, less volume. But if the stock is listed on a major U.S. exchange, and it's trading in pre-market hour, meets our thresholds, it can make this list, and that includes small cap stocks, ETFs, leverage products, inverse products. So to narrow down this list to a small group of stocks, we could use the filters above. If you have a watch list that you created and you follow a certain group of stocks, you can filter this list using your watch list. We're going to use this filter in ETF in our example, and I'm going to click on it. When you do that, you get a drop-down menu to select from with different ETFs. We're going to select the top one, SPY, which is the S&P 500 ETF. And when we click on that, the list below got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see 36 stocks made it onto our biggest percentage gainers list, 3, hit our largest decliners list. So that also points to a more bullish bias in the pre-market trading. So we looked at it from 3 different perspectives. They all pretty much support trading in the pre-market hours so far has a bullish lean, positive lean. And we did give it a couple minutes, Will, so I'm going to stop here and take questions if you have them.
Yeah, nothing's popped up today. You're more than welcome to go and look at NVIDIA if you see.
Okay, yeah. So let's go to NVIDIA here. And so far here in the pre-market, we see it's up 12%. So let's take a look at it first from where did the straddle at the end of the day yesterday close out in the options? What was the straddle indicating? Where was the implied move versus the actual? And then we'll just kind of start, looking at different reports to see if we could get more insights from a historical perspective, just to compare it to today's moves. So let's go to earnings. And I'm going to go to this implied moves versus historical implied moves. So here we see that yesterday looks like the options were indicating a 9.2% move in either direction. That's where the straddle came out. So I'm going to come down here, and this is where we are right now. So you could see here that bar, it's up and down around the 0%, right? So up or down 9.2%. That's how the option straddle is priced. If you're buying a call, buying a put, then the stock has to move by big enough percentage to cover the cost of both. So that was 9.2% yesterday. So far in a pre-market, the stock is up over 12%. So you could see here as I'm hovering over it, that green bar is indicating the move is up. And because that green bar that's overlapping that, the implied move, you could see that it broke through the expected range. We're above it now, right? 12.2% above the 9.2%. So far, that's in the pre-market trading. And we could see how it looked like historically going back in time. So, it's no stranger to that, especially like I'm just eyeballing it. And it seems like in the last, what is that? I'm looking at 3 years of data. It looks like, the times that it broke through the expected range so far have all been to the upside. And I'm just like eyeballing it right now. Now, let's take a look at it from the distribution of returns around earnings. All right, so let's see how those earnings look like, the day of and at the open. So I'm going to come over here. I'm going to look at the earnings moves. So here we have a table that breaks down how the stock performed, leading up to earnings, how the stock performed the day of, how it performed immediate following the earnings. And here we're right here, day of earnings, right? So far, we're waiting for this opening gap, and we could see here that the stock open, gapped up, down, looks like, it pretty much even. We are looking at unchanged here. So 45% of the time gapped higher, 45% was opened lower. But on average, the stock has gained 4.2% on the gaps, which means that there's a positive lean towards those gaps, right? That the up moves exceeded the magnitude of the down moves. And on average, The up and down move was 6.5%. Up or down with a biggest move 26.1. We had an unchanged here. So you can see here's 26. It was up 26% on May 24th earnings after reported after the market closed the next day, 26%. And here's the high and low range. As high as 26.1 up, low 5.6. So you could see that so far in the last 3 years, the skew, the magnitude of the moves, the skews to the upside. And right now we're up 11.9. I believe we were up more than this earlier. So I think it's drifting a little bit lower. What about the day of trading, right? Okay, so we're going to open up 9:30. From that point on, how does the stock behave? Right. So if we're using the pre-market as an indicator, we're expecting that it's going to open up so far. But once it opens, right, what happens usually? So this is the historicals from a historical perspective. The magnitude of the moves from the open to the high of the day. So we're looking at the range now, right? Like the potential ranges to the day's extremes from the open. So from the open to the high of the day, it looks like the average move is 3.3%. So you can see here, these are the different moves from the open to the high. We had a 12.9%, which is skewing probably this average up, but you can see here. From the open to the low of the day, the average move was 2.9%. So it looks like it's pretty volatile, around 3%, a little bit more skewed towards the higher end, right? So it looks like a little bit more liquidity towards the upside than down. By the end of the day, it looks like more often it closes lower from the open, right? Not from the previous day. We're talking about from the open. So it could still, on the day, it could, so look over here, at the open, it was up 26%, but by the end of the day, it was only up 24%. So from the open to the close, we're talking about the drift. Looks like 64% of the time it sold off, 36% of the time it continued to it rallied from the open. On average, it gained 0.2%. So how do we read into that? Even though the down moves were more frequent, it looks like in the last 3 years that the up moves, there must have been some big up moves that pulled the average up. And I could just see here we have an 11.4% move to the upside, 6%. And you could see the down moves were a little bit more muted by the end of the day. Okay. And if we come down here are the median moves up and down. So let's look at it from a couple more perspectives. Let's see how the open interest actually looks like in NVIDIA. So I'm going to come down here. Let's go to the options. Let's look at the activity here. And let's see. Let's look at this open interest tab. And here we see that the open interest, looks like it increased. So this is the open interest. And this is the 1-day change here. To me, it looks like it increased almost across the board in every expiration. The biggest increase was this short-term option, February 23rd, expiring tomorrow. That increased by 200,000 contracts just yesterday. So let's click on that and just see what strikes had the biggest increase. Where was that increase? Was it spread out, evenly across different different strikes, or was there a particular strike maybe that stood out? Let's take a look at that. So I'm going to click on this 200,000, and then below we get this now graph, and this here shows us it's two graph, right? One up top shows us the open interest in the calls by different strikes, and the graph below shows us the open interest in the puts by different strikes for that February 23rd expiration. And those green lines, so you have stacked yellow and green. So the yellow was the open interest the day before, and the green is where the open interest increased to the new level. So that was from the previous day's trade, yesterday's trade. Same thing with over here, down here, that's the open interest in the puts. If there's a decrease, then it would be in red. So we could see here that one of the standouts yesterday, we had open interest increase. You could see here different strikes in the open interest, but the biggest one so far that I see is up here. I'm hovering over it right now. The 1,300 strike call increased by 36,000 contracts. Went from 16,000 open interest to 52,000. And that is indicating a lot of probably speculators thinking that, there's risk in this stock. Maybe they don't want to go in on the stock, but if there's a potential monster move to the upside, they don't want to miss out. So it looks like maybe that was what's going on, because that strike is pretty far away. I mean, we're talking about a move of 100%, right? That strike is we'd have to see a gain of over 100% for those options to make sense. But that's like where it looks to me like the biggest jump in open interest was those really far out of the money calls. As far as like puts and the other puts and calls, it looks like they're pretty, much, below that, evenly distributed. We're talking about, 3,000-4,000 contracts increasing in some of the calls and some of the puts. So that's the only one really that sticks out to me right now, is that there's, a lot of speculative call buying way out of the monies yesterday in the front market. Now let's go to, if there are no questions, I'm going to keep moving, just looking at it from a couple different perspectives. Let's come back to the earnings. I'm going to go to these interactive charts. So here, we're right now at the early stages, right in the pre-market. So let's just take a look at how these opening gaps look like historically. So when I click on these earnings gaps, now we get a longer history. You could see here now it's going back 10 years of history, and we could narrow it down. But if we just wanted to see all, and of course, you have to consider that 10 years ago, 8 years ago, 5 years ago, NVIDIA itself was in a different situation than it is now, right? Now we have the AI. So you always have to take that into consideration when you're looking at data. Like, well, how relevant is that data to today? Maybe the last year is more relevant than so it's all this you need to take into consideration when you do data analysis. But let's just start out so far, looking at a wider data set, we can narrow it down. So here, what this has shown us is that over the longer period of time, this is the graph here and shows us the opening gaps. And all the bars are going up because we're looking at the magnitude of the gaps. So the green one means the gap was up, the red bar means the gap was down, but we're just comparing the magnitude of the gaps here. And then this line over here, dotted line, is the average of all those gap moves. And just looking at this, you could see that the gap moves are all over the place. Sometimes the data is showing that there's no, steady, it's not stationary data. It's like it could be up a lot here. We got some bars up a lot. Then we have some that are very small here. Maybe one observation is that it looks like, the smaller ones cluster a little bit together. The larger ones, like over here, cluster and then they fall off. But they could be. There's a lot of variability to this data, right? So it's very risky. It could be very small move, very big. And here's the summary of this data, summary stats. So if we just look at the absolute average, the magnitude of the move, on average in the long period, 10 years, up or down 5.8%, with the biggest move up, with the biggest move 26.1%. We had an unchanged, median move 4.1. If we just looked at the simple averages and averaged them out, we see that the average move was up 3.1%, meaning that the opening gaps are skewed towards the upside. Biggest move to the upside was 26%. Biggest move to the downside was down 19%. Median move 2.5%, and it tended to be up more than down. 58% of the time, the stock gapped higher. 38% of the time, it gapped lower. So far that points to a more lean towards the positive side. So let's narrow down this data. Maybe let's take a look at just fourth quarter. We are in the fourth quarter right now. This is fourth quarter earnings. So what if we just looked at fourth quarter and just to see if these numbers changed by a lot, right? How does the distribution of the fourth quarter look versus the distribution of just the whole data set? So I'm going to click on the fourth quarter over here. And now the whole thing reloaded for us. So the fourth quarter looks a little bit different from the perspective of, it looks like maybe the magnitude of the moves is a little bit higher, 6% and 5%. Looks like the skew is a little bit more dominant to the upside. So we're looking at an average move of 4.7% with a median move of 5.5% positive, and the frequency of the up moves are 80% versus 20%. So that's maybe one comparison that sticks out, is that if we narrow down this data from all the earnings to fourth quarter only, so you could see 80% for 4.7. This here's all. Let's come back to the all. So you can see here 58% versus 3.1. Looks like the fourth quarter just performed better than if we just took the entire data set. So far, we could narrow down 6 years, data, 4 years of data, 2 years of data. So you could see, 2 years you're only going to get 2. So, you could use these filters up here to narrow down the data. Let's go back to all. So how does the stock do intraday? Right? Let's take a look at that. So I'm going to go to the intraday drift. So this is from the open to the close. And here we see the same graph with same stats. So if we took 10 years of data, we expanded it Here it shows that more often it was up a little, 58% versus 43%. The magnitude of the move up or down is 2.8%. So about a 3%, in either direction. So still has some volatility during the day. And here the average of them is skewed towards positive side. What if we did the fourth quarter? So let's do the fourth quarter. And here we see after the opening, right? It looks like from the open to the close. Here the moves look like, 50-50. Half the time they're up, half the time they're down. On average, the move in either direction was 2.5%. So a little bit more muted than all the data. But the skew here now looks like it was towards the negative side. So here on the fourth quarter, keep in mind, this is from the open to the close. Looks like the magnitude of the down moves, even though half the moves were up, half the moves were down, looks like the magnitude of the down moves exceeded the magnitude of the up moves on average. And we could see that from the graph. You could see that those red bars, right? All these red bars are how much higher than these green bars. Okay, so that's one observation. Let's see how this looks like if the earnings move, the gap was up. So I'm going to narrow this down. So it'll show me fourth quarter and only when the stock gapped up in the morning, just like it, if we're expecting it today. So let's click on that. All right, now here we have a little bit of a different picture. So here, the magnitude of the moves from open to close is 1.9%. The skew is still towards the negative side, 0.9, but there were more frequent up moves than down moves. All right, so you can see we're manipulating the data, narrowing it down just to compare how the data may be changing. And in this situation, what we're seeing is that the up moves were more frequent. However, we still have a situation where when it was down, those down moves exceeded the up moves on average. Okay, that's why we have this negative. So that's that's a quick intraday from open to the close. What if we wanted to see from the high, the moves from the open to the higher and the low of the day? So then we could come over here. And here, well, let's uncheck this first. Let's start from all the data. And actually, we're right up at 9:30. So I'm going to stop here.
Maybe we'll look from here on tomorrow. Awesome job, D.
Yeah. All right, everyone. Thank you for joining. Stay safe out there. Have a great trading day, and we hope to see you guys tomorrow.
Trading peace, chameleons. Thanks, D. Bye.
Yep. Thanks, everyone. Bye.